You know Comcast, right? Of course you do. They're the company that brings the internet and TV into millions and millions of homes. But what if I told you that Wall Street is looking at this absolute giant and basically seeing a company that's about to fail? Yeah, there's a fascinating story here that the numbers are screaming, and it's a story most of the market seems to be completely missing.
Take a look at this number, $22.6 billion. Now, that's not their revenue. That is Comcast's annual net income, pure profit. This thing is a cash machine. It makes more money in a single year than a lot of other companies in the S&P 500 are even worth. It's just a staggering amount of money for any business.
And that right there brings us to the central mystery we're unpacking today. If Comcast is raking in that much cash, why in the world is Wall Street treating it like it's on the verge of collapse? You've got this huge contradiction between the numbers and the popular story, and we are going to pull that apart. Okay, so to solve this puzzle, let's first get a real handle on the sheer scale we're talking about here. Because it's really easy to forget that Comcast isn't just a big company, it's an absolute giant, kind of hiding in plain sight. Just look at this cocktail of numbers. Over $123 billion in revenue, okay, that's giant status. A dividend yield close to 5%, that screams stability. But then you see it, a price-to-earnings ratio of just 4.4. That's the kind of valuation you'd expect to see on a struggling company in a totally dying industry. And that right there is the heart of the contradiction.
So, what is really going on? Well, it all boils down to the story Wall Street tells itself about Comcast. And according to our source material for this explainer, that story is just a complete misdiagnosis of the facts on the ground.
So here are the three big arguments that are weighing down the stock. First, there's this huge fear that everyone cutting their cable TV subscription is going to sink the whole ship. Second, there's this idea that cable is just a relic, like a video rental store in the age of streaming. And third, investors are just, they're bored by it. They're chasing the shiny new thing, the excitement of AI and high-growth tech, and they're ignoring these boring, old, stable cash cows.
But let's just tackle that first myth head-on, because this is where it gets really interesting. The great irony here is that cord cutting has actually, in a weird way, helped Comcast's bottom line. See, video subscriptions have way lower profit margins than broadband internet. So as the company sheds those low-profit video customers, its overall profitability actually gets healthier.
And this brings us to the second big misconception. Comparing Comcast to Blockbuster just completely misunderstands what their business is today. Their main product isn't cable TV anymore. It's high-speed internet. They own the essential pipes, the infrastructure that delivers our entire digital world. So you got to think of them less like a media company and more like your power company.
Okay, so if that's the myth, then what's the reality? To really get why there might be value here, we have to look past that old, outdated story and see what Comcast's business actually looks like today. The company today is really built on three separate but connected pillars. First and most important is connectivity. That's the broadband engine that really drives the whole business. Then you've got content and media through the global powerhouse that is NBC Universal. And finally, you have this forward-looking strategic play with Peacock, which is designed to grab a piece of the future of how we all consume content. I really love this quote from the source because it just perfectly nails the power of their core business. Broadband isn't a luxury, right? It's a necessity. You need it for work, for school, for entertainment, and that means it generates reliable, high-margin revenue month after month after month. You really can't say that about a lot of businesses today. And then, on top of that essential utility business, you have this incredibly diverse media empire. NBC Universal isn't just one thing. It's blockbuster movies, it's those hugely profitable theme parks like Super Nintendo World, and it's a whole portfolio of different networks. This diversification creates a ton of resilience, right? It's a hedge against a downturn in any one of those single areas. So we've established we have this strong, diverse, essential business. Now let's connect that all the way back to the stock price and see just how massive this disconnect really is.
I know, we keep coming back to this number because it's at the absolute heart of this whole mystery, a price-to-earnings ratio of 4.4. It is so low, it honestly looks like a typo for a business that's this stable and profitable.
And the crucial thing is seeing how this number stacks up against everyone else. Comcast is valued at roughly half the multiple of its direct competitors like AT&T and Verizon, and it's trading at less than a quarter of the valuation of the average S&P 500 company. I mean, the market is pricing this business for some kind of catastrophe that just isn't happening.
And this chart really visualizes the potential opportunity that disconnect creates. Based on the valuation models from our source, which just apply a more normal industry multiple to Comcast's earnings, its fair value could be around $48 a share on the low end. That's almost double its current price. And on the higher end, that potential value is over $70.
So why? Why does this gap even exist? And why does the author of our source material see it as such a clear-cut opportunity? Well, it comes down to a bit of psychology and just fundamental business strength.
A huge reason is a behavioral bias that's known as anchoring. Basically, investors got this one idea stuck in their heads years ago. Cord cutting is bad. And they've anchored their whole view of Comcast to that one outdated fear. They've just failed to update their thinking to the new reality, that Comcast is now, first and foremost, a broadband infrastructure company.
And that new reality is protected by a really powerful economic moat. This is not a business that can be easily disrupted. They have physical dominance over the infrastructure, it's expensive and annoying for customers to switch providers, and they have this media and theme park ecosystem that just reinforces the whole brand. A startup can't just come along and replicate that overnight.
This quote really just says it all, doesn't it? The market is treating Comcast like its business model is fundamentally broken. But the numbers, the business strategy, its market position, they all tell a completely different story. The problem isn't with the company, it's with the price tag the market has decided to slap on it.
And that leaves us with one final big question to think about. In the stock market, you've always got these two forces clashing. You have the popular narrative, the story everyone tells, and you have the hard, cold numbers. With Comcast, those two things are telling completely different stories. So the question for any investor is pretty simple. Which one do you think reveals the truth?